Hello, my friends. Brett Pattison with Iron Gate Global Advisors coming at you from the financial capital of the West. That, my friends, is Salt Lake City, Utah. Thank you for taking a few minutes of your day to learn about something pretty darn important. It is the key to investing. That's what we're going to address today. We'll talk about February. We'll highlight February as far as the market was concerned. We'll highlight a few key takeaways from one of our favorite annual reports, which is Buffett's annual letter. And, of course, we'll address what's on the screen right now, which is the key to investing. But let's first talk about February. And February recap, and you see an American flag, which it is today. Super Tuesday. We live in an incredible country. We're going to talk more about that here in a moment. But let's take a look at the 1 month returns for the different global markets. We've talked about these markets before. They shouldn't be. If you've listened to this commentary regularly, you should not be unfamiliar. We've got the SPY, which is a product that tracks the S&P 500. That was up almost 2% in the last month. Decent returns for all the gloom and doom that we've heard. The emerging market's certainly up more than that. The global market's up around, which is a combination of Europe, Asia, U.S., emerging markets, which is China, India. That's what the ACWI is. That was up about 1%. Europe down 1%. Not that bad for what we're hearing in the news. Decent returns for the last month. Let's look at the last year. The last year, if you're focusing on 1 year, they haven't been great. S&P 500 is down about 5% for the last year. Our advice to you would be this. We don't invest for 6 months. We don't invest for 1 year. Our focus is 2, 3, 4, 5 years from now. Is the market going to be higher or is it going to be lower? And the last 5 years, the S&P 500 is up, just based on this ETF, right, that tracks it, is up over 60%, 65%. That's pretty darn good. Now, the rest of the globe hasn't been as good, which is why we're heavily weighted almost exclusively to the S&P 500, to the U.S. markets right now. But decent returns for 5 years. So good month in February. We look for a continued strength in the market for March, although we don't know for sure what will happen. But certainly for the next 5 years, we're definitely optimistic. And here's something that we addressed last month. We talked about for 10 minutes on that webcast that we did or video that we did, talking about why we love the bear and embrace the bear and give the bear a high five rather than being afraid of the bear. And let me illustrate the point that as to why we love the bear. Here's a chart, the last 6 months of the S&P 500, and you can see it's sideways to down a little bit. And it was interesting on one day in February, and I'll highlight the specific day. On one day in February, I received a couple phone calls from some clients that don't really know much about the market. They follow the news a little bit, but they don't, they're not detailed market, followers or investors. They do probably as much as anybody else, which isn't a ton. And I said this tweet, which tells you about our phone conversation. This was something that I sent out that day. After these few phone calls, I said, when people who know nothing about the markets, very little about the markets, and I'm not going to tell you who these clients were, but when they start telling me to go into cash, that tells you something about where we are. And I want you to note the date, February 11th. Now on the chart, I will circle February 11th. And it's interesting when fear is at its maximum level, people are ready to surrender. That's often the best time to invest. I don't know if February 11th is going to be the bottom. I don't know. I believe we're moving higher from here, although I don't know for sure. But it's interesting when we see these different signs, and most of the signs that we see are psychological. It tells you there's great opportunities. And a lesson that I learned from a great movie was The Big Short. Fabulous movie. And it was pictured on your screen is Christian Bale, who played a hedge fund manager, Michael Burry. And this was one of my favorite scenes in the movie because it taught me a lot, or reiterated a lot to me. In 2007, he made about 166% return for his investors. And he's sitting there after his investors received this huge sum from being short, the mortgage market. And he's listening to voicemails in this particular scene in the movie towards the end. And one of the voicemails was an individual that said, "You're buying stocks. The market is at an all-time low. Are you crazy?" And he quickly deleted the message. But to me, that just, again, it reiterated the point I just made. When people are fearful, when they are scary, when they lose sight of what is the key to investing, which I'll share with you here in a second, then you know it's a great opportunity ahead, right? Certainly Michael Burry knows what the key to investing is. And it's very simple. It's, Howard Marks, one of my favorite investors of all time, said this: great returns, phenomenal fund manager. He said, "It shouldn't take you too long to figure out success in investing is not a function of what you buy. It's a function of what you pay." And I love that. He says it much better than I can. The most important thing in investing, the key to investing, is the price at which you buy assets. And when there's fear in the market, like February 11th, or like certainly 2009, right? When he's receiving voicemails like that, that's great opportunities. And that's when things are cheap. And the cheaper they are, the less risky they are. Looking out 2, 3, 4, 5 years, you have a pretty good opportunity to make money. That's the key to investing. What you pay for an investment. We're pretty excited for our portfolios as we know what we're paying, have a pretty good idea of what we're paying, and are confident in those different underlyings. So anyway, the key to investing. Now let's move to Warren Buffett. And one thing that I love every year that comes out, last weekend in February, is Warren Buffett's annual letter to his shareholders. Great education. I urge everybody to read it, to read not just this year's, as this year was maybe a little bit more light on the wisdom that he has to say. But read, 1987 is probably my favorite letter. Read past letters if you really want to be educated in the market. But this is what he, some highlights as to what he said in his annual letter. This year at Berkshire, it was a record year. They made, their net gain was about $15.4 billion. On a per share, if you're looking at book value, which is what the stocks are really worth, it increased 6.4%. Right? So the stock on a per share basis increased in book value 6.4%. The stock was down 8% over the last year. Think about that for a second. We're talking about the key to investing. We're talking about, buying good things at a value. That's the kind of thing you look for. Now, that's not a recommendation to buy Berkshire. But, when something increases in value and it's a record year, but the stock is down, that's where the market completely dislodges from reality. And those are the opportunities you look for. Warren Buffett in a different letter said, "I'd be a bum on the street with a tin cup if the markets were always efficient." You look for those inefficiencies. That's the key. Buying things that are cheap, that have been thrown out for no good reason. That's what you look for. A couple other things that he mentioned in his letter was he focused on America, and this is something that we definitely believe. It's Super Tuesday today as I record. Politicians are talking about how horrible things are in the country and how bad things are, and we disagree. We are more on the side of Buffett, who said this: for 240 years, it's been a terrible mistake to bet against America, and now is no time to start. That's taken from this this report. And then he said in an interview, which I find fascinating, he said in an interview with CNBC, he said, look, after Pearl Harbor, I was buying stocks. And he was a young guy. He's 85 now. He was a young kid then. He said after 9/11, I bought. After the financial crisis or during the financial crisis, I bought. And he also said he's a buyer right now because of the fear. Again, the focus is 3 to 5 years out. Now is no time to bet against America. If you are buying at the right price, knowing that in the next 5 years, 3 years, 4 years, 5 years, that something should be worth more, then that has an opportunity to be a great investment. And that's how we work. Great letter by Mr. Buffett. He talks about our kids have more right now, and future generations have more right now in the middle class of America than Rockefeller did when he was alive. And he was the richest man on the planet. Great time to be alive. Be optimistic about the future. And we certainly agree. The last thing I would tell you to do, and the advice that I'd have for you, because I think psychologically it's so hard for people to invest. So I want you to realize this and just do this for me. I need everybody to relax. The market seems to be fine. Find those investments that have been thrown out that are cheap. That's the key to investing. And if you need help, realize that we have you covered. We're here to help you. Please visit our blog posts as well, our blog on our website, igga.com. You can check out what we believe is important material based upon what's happening in the market. It's updated 2-3 times a week. And if you have any questions, feel free to send me an email, brett@igga.com. That's brett@igga.com. You can see it right there on your screen. Reach out if you have any questions. Thanks, folks. Until next month.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.